Hello, I'm David Chaston with 989, brought to you by interest.co.nz. This week at everything you need to know in 90 seconds at 9 o'clock. With news, the emerging market wobbles just got worse. But first, American consumer spending increased solidly in July, suggesting good economic growth early in the third quarter, while the Fed's preferred measure of underlying inflation hit their 2% target for the third time this year. But Wall Street is taking fright, both with new shots fired in the trade war by the US administration and escalating emerging market woes. The Standard & Poor's 500 is down 0.6%, most of that fall in the past hour. Canadian economic growth jumped to an annual rate of 2.9% in the June quarter, a sizable jump from the March quarter and the 2 quarters prior to that. But the rise was expected. In fact, it missed analyst expectations of a 3% jump by a whisker. The jump was essentially driven by a much better export performance. EU economic confidence is slipping, although it has to be noted from a relatively high level. Consumer confidence is down, and rather sharply, and so is business sentiment, which is seeing slower order growth. July global air passenger traffic was up solidly, gaining 6.2% year-on-year as the Northern Hemisphere vacation season got underway. But the stronger growth was in domestic travel, especially in China and India. International travel grew 5.3%, although the Asia-Pacific region posted a much more impressive 7.5% growth rate. But the crisis in Argentina got a lot worse overnight. Their currency came under fresh attack, the government pleaded for the IMF to release funds early, and their central bank raised their interest rates from 45% to 60%, and said it wasn't coming down for the rest of 2018. Other emerging market currencies, like those of Turkey, Indonesia, Brazil and India, have also been hard hit. In China, housing rent increases are worrying authorities there. Shenzhen, the boom city just across the border from Hong Kong, is to try rent control. They plan to cap the annual rise in residential rents at 5%. And the Chinese-backed regional free trade deal, the RCEP, looks like it will get approval by the end of 2018. US Treasury 10-year yield was unchanged at 2.88% earlier, and the 2-10 curve is at 21 basis points, but that has now slipped to 2.86% for the same reasons Wall Street is slipping. And the Aussie government 10-year is at 2.55% unchanged. The Chinese government 10-year is at 3.64%, up 1 basis point, while the New Zealand government 10-year is at 2.58%, down a chunky 6 basis points. Yesterday's business confidence slumped at that. Gold is lower today, down $6 at just $1,199 an ounce in New York. US oil prices are up sharply, and up sharply again, now at just over $70.50, while the Brent benchmark is just under $78 a barrel. And the Kiwi dollar lost 0.5% yesterday on the slumping business confidence data and has stayed down overnight at 66.4 US cents. On the cross rates were softer at 91.4 Aussie cents and at 56.9 euro cents, which I think is a 3-year low. That puts the TWI at 70 and back to where it was 2 weeks ago. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.